Hey everybody, welcome to another video. Today we're going to talk about something that's really simple that I think will help everyone as far as learning how to trade. And let me just diagnose you for a second. So the first thing is, if you're watching this, you're probably struggling, right? Either struggling or you're doing something and you want to do something else. Perfect. Now, if you're struggling, there's a few main problems. The first is your discipline. Can you show up and do the same thing? Now, when we say that, it sounds really hard because no one defines the term discipline. What people mean when they say discipline is you have a plan, you follow the plan, right? But you hear that and you think, okay, there's a million things I've got to do. It's going to be really hard. And you approach it as if it's like this huge thing that you need to accomplish. In reality, it's a lot simpler. You need to break it down to simple, small, easy, repeatable concepts because every big change is just small little things over and over. So what do I mean by that? Well, when you have trading, a lot of people, they like ICT concepts, other concepts, and good luck, right? I'm personally not using that stuff. And the reason is because I think this is a lot simpler. And I think it's simpler because a dog's a dog, a cat's a cat, so to speak. We know what a buy looks like. We know what a sell looks like. And if you know what they look like, you can get in, do it the same way every single day. No second guessing. There's not like a new thing that came out. Now you have to look for another thing and you throw it all together and it's just really overwhelming. And I say most of that happens because everyone thinks in order to be right in trading, you have to catch some giant move like this here. Like you need to walk up to the chart and you need to know price is going to do this, right? And let's say you have an even better entry. Say it was here. Everyone thinks you have to come in here and do this, right? And know it's going to go this far. Not true, right? And the reason it's not true is because price is more likely to move 1 than it is to move 20, if that makes sense. Meaning, when you're trading, if you get in here and you have a 2-point stop and you're targeting 23 points, you're going to get stopped out something like 98% of the time because it's more likely to go up 3 and then down 3 than to go up 600 and down 2, right? Very unlikely it's going to go up 600 and down 2 just because it's math, right? It's like markets, when it comes down to shorter term, they're random, 100% random. And now, is there indicators and stuff where it's like maybe you can be right 60% of the time, maybe 70% of the time, and say like, it's going to move 1,000 and I'm going to risk 5? Maybe, right? I just haven't seen that come out of the whole trading world. Now, what I have seen, and I've been around since 2020, a lot of people, I'm sure, got into trading around that time with me as well. But what I have seen is you can be right on smaller things and make a ton of money, right? It's all about, can you win more than you lose? And do you have the confidence in your system where even if it's losing for like 1, 2, 3, 4 trades in a row, can you go and take the 5th one? And if that's the case, that's a lot easier because you just have to show up and be like, well, I just need 3 points, 5 points, 10 points, small amount. And then I can succeed because, price is more likely to move 10 than it is to move 100. So if you're going in for 10 points every day, you're more likely to get that, right? Now, if you do that every day, maybe not just one time frame or one chart, but if you do that across 10 charts and it's, this is more likely to work than it's not, even if it's 50-50, it allows you to get into winning trades where you can get in and say, okay, my stop's here, my target's here. If it hits my target, I'm either going to break even the trade. I can't lose. I'm going to reduce the trade, ideally by half. Or I'm going to fully exit and just take the win. If you can do that every day and define those things, just small little moves, then you can make a ton. Because once you can make little wins like that, and make them work, where it's like, oh, I bought it and made $20. I bought it, made $20, bought it, made. It's like, okay, well, if I'm making $20 on these little moves, now it's the big moves. How do we do the big moves? The big moves, we need to time these signals. It could be any trading method you want, support and resistance, reclaim, PD arrays, whatever you want. Doesn't matter. That's the beautiful thing. It doesn't matter. It all works the same. If we can do that, and we can do it into higher time frame trends, up or down, where we can look at it and be like, well, it's been going up, hasn't reversed, probably still going up. Then once you can make the little winning trade, it's a matter of, okay, I'm going to reduce it by half now. I can put my stop lower than my entry because I've already made the winning trade. So if I, make, let's say $10 per 100 shares. So I got in the trade, I made $1,000. It went up $10. If I reduce that by half, I now have 50 shares. And with those 50 shares, I still have the shares. Those shares are still up $500 because it's $10 a share. However, I also have $500 in my account I didn't have before. So now I'm up on the trade. So if it comes back to my entry, those 50 shares, they're worth zero, right? Like they haven't gone up from where I bought them, but I still have the $500 in my account. So I can move my stop lower. And like we said, right? Price is more likely to move 1 than it is to move 100 or 10 or 20, right? So if we can move our stop further away from price on things we know are, going up as far as we know, then price is less likely to take that position out. It's further away from where we got it. Therefore, we can hold. And if we're wrong, it comes all the way back, which is less likely to do because it just went up, 20 points, whatever it is. Then, or 10 points, right? We bought it, made the 10 points. Then as long as price stays up there, we don't have to get out. So if you can just time little wins, that's all you need, right? And the strat is beautiful at this. It's just beautiful because it's very visual. A lot of people, they're like, well, I have to look at this and this and this and this. It's like, you just have to know what one little bar looks like and you can instantly go in there, start making winning positions and holding them ideally into higher time frame uptrends or downtrends. So let me just show you an example of a signal. So you're going to see this. This is the inside bar signal, and it's the second most common you're going to see on a chart. The first most common is the 2-2 reversal. But if we go in here and we look at what an inside bar is, well, it starts like this. We call it a 2-1-2 reversal because this is a trend, then it's inside bar, and then it's a trend. A 2 is a trend. So when this is inside, this tells us price is likely to move, right? And like we said, up or down, price is likely to go up 1 or down 1 and pretty much the same in a short time frame. But with a signal, if it breaks directionally. So we at least get a hint like, well, it broke down. The seller is more aggressive because it broke down. So when it breaks, what you do is you trigger into other levels of people who are long. It's like, imagine this was like a yearly chart. It's like everyone bought NVIDIA last year. And then it goes inside year the next year. It's going sideways. Everyone's like, NVIDIA has stalled out. It's going to set up for the next breakout in the next year, whatever. And then it breaks down. It breaks here. Everyone that was like, hey, NVIDIA is just firming up. It's gonna be going up next year. When it takes this out, all those guys are like, my account's going red right now. I need to get out of NVIDIA, right? So they start selling. And you have a new seller that's already in here. Because the fact that it broke lower shows that there's a seller's been identified. It's going lower. So if the beginning of the year looks like this, it breaks. We're like, okay, hint, we'd prefer to be selling this year. And then so long as it stays below its open and below this, we have reason to believe we might take these guys out. So now the guys that bought NVIDIA and were sitting pretty for, this whole year takes this out. Everyone that bought in here, they are now underwater, right? So they're either going to have to get out or they're going to go into further loss, right? And when you're trading shorter term timeframes, they normally just get out, right? Now that's not accounting for bigger timeframes. But if this was a yearly, right, it's the biggest time frame we have, unless you want to start piecing time frames together. But that being said, when we take the break, we can have a stop against the open. We call it continuity. We can have a stop against the high of this bar. We just call that, continuity change, and we're giving it a little room. And we could also put it against here and say, well, this would be a reversal against us. Because at this point, you'll see it made lower highs to this high, higher lows to this low. So it was going sideways. And now it's lower highs, lower lows. That's a reversal. So unless we make higher highs to take this out, then, at that point, it's still going down. It's making lower highs. So that'd be the widest one we would use. So if we go to a 212, it's really simple to be like, okay, I just need to make a small winning position. I can put my stop here, right? I can put my stop here, or I can put my stop close to my entry. Normally we would use like the spread. And the spread on this, might be a little wider, so you might have to use the wider stop. But then what we target is to take all this out, all these pivot lows. You can see the first pivot target. This is a small time frame, so bear with me. But the first pivot target right here, this is our target. So this would be the whole trade, right? You'd get in and that's your target. This is why we don't like trading intraday stuff, but it also is why intraday can work, because you can get in here, boom, target hit, and then it keeps going. It's like, okay, I'll just hold, right? It's like, if it's going straight down, you just hold it. And then it closes. Now we don't have the signal, right? Because this signal, once this closes out, it's done as far as we know. So we can close our position or reduce it by half. If we reduce it, right, our stop can go even. And if it comes back, we make money. Beautiful. If we reduce it and we want to risk the money we made, since we made $3 on the downside, our stop can go $3 above. So it'd be, so we could go and put our stops up here and say, okay, well, if we had a reason to be short this on a higher time frame, we can have a break-even stop, still slightly in profit. So we pay for commissions, maybe we buy a burger or something for lunch. And then, if I'm right, I'm going to be really right, because I can sell more short if I wanted to. Now in this case, right, we look at just these higher time frame indicators. The 60 minutes green. So they're buying right now on the 60. The day is green. They're buying today. That's already a bad recipe, right? Because today and right now they're buying and I'm trying to sell it. Not a good thing to do, right? If we go to the week, they're buying this week, this month, this quarter, this year. It's like, okay, well, there's institutional buying going on, because the yearly guys who are going to be buying all year, that's institutions. That's 401ks. That's funds. That's countries, right? Big institutional groups are always going to be big time frames, because you're tracking the participation across a yearly basis. So you're looking at all the buy and sell orders that year. That's, the most accurate flow you can get, because if they're all buying this year, it's gonna be above the yearly open, because supply and demand, there's only so much. It has to go up in value if everyone's buying, especially if they're aggressively buying, which is what this is actually tracking. So if the year's green, it's like, yes, this year, Saudi Arabia is buying gold, China's buying gold, United States is buying gold, Canada, blah, blah, blah. Doesn't matter. Doesn't matter who it is. We know they're buying, right? And then this quarter, they're buying. So that yearly guy, this quarter is buying. This month, the yearly guy this month is buying. This week, that yearly guy is buying this week. Today, they're buying today and right now. So is that a short? No. It's like, Alex, when you put it that way, it's pretty easy to understand, right? So what can we do? We can trade signals up or down, or the rejections of the downside signals. So for example, we can take this signal, right? And let's say we're using the low of this bar. Okay, we take it, boom, it goes flying. Once it goes flying up here, if you really want to play defense hard, you can just put your stop here. Now, since we want to be long this thing, when it goes flying like this, we're okay if it stops us out. The reason we're okay with that is because look at the evidence we have. Is this 1.5 point stop gonna hurt you on a $3,900 name? No, right? You could take 20 of these and you'd be having a fine day if only 5 of them won, right? You wouldn't be down 20% your account. Never. Now, we create a shooter signal. So you can look at this two ways. The first is you could say, okay, that seller right in here, they came back. Now, from what we've already explained on the higher time frame, do we really want to be selling this thing? Probably not, right? It's like, if Saudi Arabia is buying right now. I'd rather not short it. You know, that doesn't make sense. Or whoever this yearly guy is that's been buying gold the past 2 years, right? Picked up on him last year, and I'll show you how, right? The same setup we're talking about now was actually on, it was on GC. Make sure we're not adjusted here. No, it's gold, my bad. So we track everything. We track the stocks, we track the futures. But you're going to see here in the stocks, this is a 3, 1, 2. Boom. That's where we identified that aggressive buyer, right? Is like we said, this is a yearly chart. What'd they just start doing this year when it took out this year's highs? They're buying, right? And as long as this is a higher low, it's not reversing down yet. So at that point, boom, they're here. And then this year, they come back to buy even more, right? So we're tracking the really big guys, long green bars. So when we go back down to like a 3-minute, do we want to be long that thing all year? Yeah. Well, you know, you're a little late. We only got 2 months left. So there might be some profit taking or some, you know, something to end off the year. But yes, that's exactly what we want to be doing. So when we go and look at this, right, we could have just been using the we buy indicator, and we can look at this and be like, everyone's buying, we're going to buy too. Or this isn't built in yet. We can trade the rejection of bearish signals in the upward direction. And the reason this is important is because bullish looking charts always look really bearish before they look bullish. And what I mean by that is this, and you can see it, right? Does this look like a bad chart? Yeah, everyone would say that looks bad. It's long red bars, right? Now, if you're playing order blocks or whatever you're doing here, maybe not. For value gaps, you know, whatever you're doing, maybe you're not, right? But in our eyes, we're short from there, and we'd like to be short until this bar closes. The next bar opens, goes green. Okay, now that's no longer a bearish looking chart, right? We made some slight lower lows. So this buyer in here, we took them out. And then potentially it goes all the way back up to this new high, right? And we got a we buy signal here, so it's higher lows. Right, 2 up in red. Now it doesn't look too hot, right? But then the buyer comes back. Now we have this shooter. So most people, right, even the fair value gap people, they'd be like, okay, fair value gap, I would like to be short this. Now, it's a shooter, so you could say below this, I want to be short. But what if we're above that, right? What if it goes green? Well, then it's a rejection with full time frame continuity where Saudi Arabia is buying. It's like, I would rather be long that with the Saudi Arabia guy, versus, Tom or whatever Joe Schmo is in here selling this, right? It's like someone that's not selling very aggressively, because it would be bright red if they're selling aggressive. And I'll show you. So when the rejection happens, you can see they tick down first. Everyone's like, whoo, good short. Then it goes green. Saudi Arabia is buying. Boom. Right. And then it takes the highs out. So this is the broadening formation. And the shooter, like we said, our signals cause movement. But price is just as likely to move one up or one down. So we have to know if price changes where it's going. So in this case, it ticks down. Then it goes green. It's changing where it's going. It's trying to go 3. And that's the only way it can happen. So if we go to a 1 minute, right, it'll make it even more clear. You see the we buy setup. It's the same thing. It's fractal. Highs, lower lows, right? So it goes up, then it goes down. And then when it goes green here, that's a buy targeting this. So it's the same idea. And you can see how that same setup would occur down in here, targeting right here. This would be the 2-2 reversal. But we can just do that. We only have to be able to get this. Even if you're late, let's say you get it late, you just have to be able to do this, right? And once you're better at this, you can get it down in here. Now, I'm not even suggesting trading a 3-minute chart, because when you go to a daily chart, this really slows it down for you, right? eBay. You can see going red, goes down. Now, this one is not an inside bar setup. There may have been one. Yeah, so you see the inside bar here. Boom. We buy. Right, coming off the new lows. Now you can see it was just the 60 in day, but that's all you need. Right? Creates a winner. This yearly guy's buying. Maybe they come back. Got the last quarter of the year, so if they're going to buy any more, it'd be this quarter, right? Then it goes inside here. You can buy more. And then inside here, you can buy more. Or if you're a daily guy, 2-2 day. 2 down, 2 up. It's going here. And you'll see this is the most common reversal that we'll see in the market. Looks like that. 2 down, 2 up. And if you do a daily signal, you instantly have the day and the 60-minute. So when you trade a daily, you have that whole day. Now, in this case, this occurred Friday. So what did it do to the week? The week was red. Then it flips the week green and the quarter and the month. And now everything's green. So you can see how that, just using that 2-2 signal to do something like this, it's not a very big trade. We don't have to be, amazing at this. Once it hits that, if we reduce by half, we can put our stops here. We can say, okay, unless you get down here, I'm not getting out. Right? I don't have to do anything. I took your money. I won. And this is how you press your winners and get your losers out really, really quick. And that's all you need to do. Because if you can do this, it just takes one good one. Right? We go to the month. You recall this in NVIDIA. New lows. That's the we buy setup. Right? 2-2. It only takes 1-2-2 reversal or 1-2-1-2 reversal to make your whole year. That's right here, right? How long did you have to wait for that? A while. When was the last one? Down here. 2-2 reversal, we buy setup. Boom. And then you'll see again, 2-2. Boom. You'll see another 2-2. So you can see it's like, you can do this as an investor, do it as a day trader, scalper guy. You can do 15-second stuff, but I'm not into that. Or if you're short-term swinging, you can use the week chart, 4-day chart, 10-day chart. Doesn't matter, right? Just pick a time frame, learn to create the winning trade, use the 2-2 or 2-1-2 reversals, and do it ideally with those higher time frames in your favor. Because when you take it and you have that quarter, that month, even the year in your favor, they tend to just keep going. So if you can just make $5 here, maybe you can make 1,000, up in here. Pretty cool stuff. That's all I've got for you guys today. If you enjoyed this video or this kind of video, let me know. And as far as the indicators used here, do not have them available yet. Something I've been working on. It's relatively simple, so I plan on just releasing it, but we'll see. Let me know what you guys think. Adios.